For 10 straight years Perth was the underperformer of Australian capital cities, the city everyone wrote off. In 2026, Perth has officially overtaken Brisbane in growth, in some weeks even beating Sydney. Nobody saw this coming. Here's exactly what happened, why, and whether you should jump in now. Let's start with the numbers because they tell a story most Australians have not yet processed. CoreLogic's most recent figures show Perth's median dwelling value rising by over 20% in the last 12 months. Brisbane, by comparison, posted growth in the high single digits. Sydney came in below 10%. For the first time since the mining boom of 2012, Perth is leading the nation. Even more strikingly, some specific Perth suburbs, Armadale, Kwinana, Rockingham, have posted growth above 30% year-on-year. The median house in Perth has crossed $750,000, still cheaper than Brisbane but closing fast. The gap that existed for a decade has effectively disappeared in just 24 months. So how did this happen? Three forces converged at the same time. First, an extreme shortage of housing supply. Perth's construction industry collapsed during the long downturn from 2014 to 2020. Builders went bankrupt, tradies left the state, and almost no new stock was being created. When demand returned, supply could not respond. Second, an interstate migration reversal. After years of Western Australians leaving for the East Coast, the flow reversed. Mining wages, lifestyle, and affordability pulled tens of thousands back to Perth. Third, the iron ore price stayed structurally high through 2024 and 2025, funding wage growth, investment, and government infrastructure spending. When these three forces hit a market already starved of stock, prices exploded. This is not random, it's a textbook supply shock combined with a demand surge. The most predictable kind of property boom there is. Now let's get specific. Where is the growth actually happening? At the affordable end, suburbs like Armadale, Gosnells, and Kelmscott have led the percentage gains. These were the cheapest postcodes in Perth, and they've been the biggest beneficiaries as first home buyers and investors hunt for sub-$600,000 opportunities. In the middle ring, suburbs like Belmont, Bayswater, and Bassendean have surged, driven by infrastructure spending and proximity to the city. At the premium end, Cottesloe, Peppermint Grove, and Dalkeith have hit record medians, with several individual sales above $10 million in the last year alone. The Perth boom isn't concentrated, it's spread across price points, which is a sign of genuine market-wide strength rather than a speculative bubble in one corner. That's an important distinction for investors. So why has Brisbane slowed? Brisbane was the darling of the early 2020s, with prices doubling in some suburbs. But by 2025, Brisbane had absorbed a huge amount of interstate migration and prices had risen so far that affordability became a brake on further growth. New supply also began catching up. The 2032 Olympics narrative is still powerful, but it's been priced in. Perth, by contrast, started 2024 from a much lower base. Median house prices in Perth were still below 2014 levels in real terms when Brisbane was at all-time highs. That gap was the opportunity. Buyers, both local and interstate, recognized it and moved. The Perth versus Brisbane shift is a perfect example of how property cycles eventually reverse, no matter how confident the consensus feels. The crucial question: how long can Perth keep running? There are two schools of thought. The optimists argue that Perth still has years of growth ahead. Median prices are still below Brisbane, well below Sydney, and well below Melbourne. The supply shortage will take 3 to 5 years to resolve because builders cannot scale up overnight. Interstate migration is continuing. Mining investment pipelines are strong. The pessimists counter that Perth is a cyclical market, and every previous boom, 2006 to 2007, 2011 to 2014, has been followed by a brutal correction. They point to iron ore price risk, the rising Australian dollar, and the inherent volatility of a resources-dependent economy. Both views have merit. The honest answer is that Perth probably has 12 to 24 more months of momentum before risks meaningfully build. After that, vigilance is essential. 3 risks that Perth investors are largely ignoring. First, iron ore price exposure. Roughly 40% of Western Australia's economy depends directly or indirectly on iron ore. If Chinese steel demand softens, and there are early warning signs, the entire wage base could contract within a year. Second, insurance costs. Perth's cyclone exposure in the north and bushfire exposure in the hills have driven home insurance premiums up sharply. This is eroding investor cash flow without anyone noticing. Third, oversupply lag. Building approvals are surging now. Most of those properties will hit the market in 2027 and 2028. By then, the supply shortage that's driving today's prices may have completely reversed. Smart investors are buying with these risks priced in, not buying as if the boom is permanent. Smart Perth buyers right now are doing 3 things. First, focusing on established suburbs with proven long-term growth records, not chasing newly developed estates on the city fringes. Second, locking in fixed-rate finance where possible, because the next rate move from the RBA is uncertain. Third, buying with at least a 10-year holding plan. Perth rewards patience but punishes short-term speculators. If you're treating Perth like a flip opportunity, history says you'll get burned. If you're treating it like a 15-year hold in a cyclically depressed major capital city, you're likely on the right side of the trade. Most Sydney and Melbourne investors looking at Perth right now make the same mistake. They compare current Perth prices to current Sydney prices, see Perth is cheaper, and assume that's the opportunity. But the smarter analysis compares Perth's current trajectory to where Sydney and Melbourne were at similar stages in their own cycles. When you do that comparison, Perth still has years of catch-up potential. Sydney's median dwelling value is roughly 70% above Perth's. Melbourne's is 20% above. Historically, the gap between Perth and the eastern capitals has been much smaller than this when expressed in real terms. The Perth recovery may simply be returning the city to its long-term valuation relationship with the rest of Australia. That re-rating process could continue for several more years before equilibrium is reached. One angle that almost nobody in the property media discusses is the Perth unit market. Median unit prices in Perth have lagged the house market significantly, with many quality units still available for under $500,000. Rental yields on Perth units can exceed 5% in some inner suburbs. For investors who cannot stretch to a Perth house but want exposure to the Perth cycle, well-located inner-city units offer a genuine opportunity that has not yet been fully discovered by interstate buyers. Suburbs like East Perth, South Perth, and parts of Subiaco offer particularly interesting unit propositions. The unit market typically lags the house market in any city cycle, and Perth units are clearly in that lag phase right now. That gap will likely close over the coming 2 to 3 years. The hardest question in any boom: when does it end? 3 early warning signs to watch for in the Perth market over the coming 12 to 24 months. First, building approvals exceeding their long-term average for more than 12 consecutive months. This signals supply is responding aggressively and the shortage that drives prices will start to ease. Second, interstate migration to Western Australia slowing or reversing. The migration flow is one of the key demand drivers. Third, iron ore prices breaking below sustained support levels. Iron ore is the lifeblood of Western Australian wages, and a meaningful price collapse historically precedes Perth property weakness by 6 to 12 months. None of these signals are flashing red right now, but smart investors monitor them monthly. The Perth cycle will end eventually. The investors who recognize the turn early will keep their gains. So that's the Perth story. The city everyone wrote off, now outperforming the country. Driven by supply shock, migration reversal, and a strong resources base. Real, but not permanent. If you found this useful, smash subscribe. We break down Australian property data every few days. And if you want to know which Australian cities are heading the opposite direction, with prices collapsing in 2026, click the video on screen. We'll see you in the next one.